A limiting belief, it's usually fear. It could be fear of failure. And if you're not identifying exactly what that fear is, you're not going to be able to confront it. You've already failed because you're not taking action. So it's like sometimes you have to level set and really believe that there's always two sides to the coin, right? The biggest differentiator of people, whoever are successful and whoever is not successful, is usually one thing, and that's action.
It is my pleasure to introduce you guys to Anjou Martinez. She's the CEO and founder of Beam Investment Group, private real estate investment firm in Houston and fast growing in Texas in general. Started real estate residential in 2009, has passively invested in 3,000 multifamily units, the GP in over 1,800 units, two car washes, which being in Florida, I live in Tampa, they're everywhere. So I always love to learn more about the car wash business. We have JC in the Alliance who does them, but I don't really meet too many people who do car washes. So I love to more about that. And as a former accountant, CMA, and CFO and controller, she's managed global companies and teams with 20 million to 500 million in revenues in logistics, media, and healthcare sectors, and graduated from Rutgers. Very cool. And has raised well over $10 million in her career. So welcome. How are you doing?
Thank you, Logan. So excited to be here. This is my second time back at Hero Alliance. Tim is a great friend. We're both in Houston. And so, again, this is really for all of you. You could be anywhere right now. I know my kids, they play soccer. They're watching France and Spain in Dallas World Cup. So you could be anywhere right now, but you're here. And so we're going to make the most out of your time and make sure that you learn something that you can take away immediately.
I love the endorsement. I love it. Really good stuff. I know last time Tim interviewed you, so this is my turn now.
Yes.
So I'd love for you to briefly describe business model and what you have going on right now in 2026.
Yeah, it's always evolving because as you can imagine, so I started in 2022. I
Mhm.
invest only in the Texas market right now. So Dallas, Houston, Austin, and San Antonio. And back in 2022, yes, we were buying deals, multifamily. That's what I've been buying. However, as you can imagine, 22, 23, 24, 25, now 2026, it's actually evolved, right? There was a time that was all general partnerships. And then before you know it, I was doing fund of funds. By 2023, I've done fund of funds. I've done 4 funds right now that are raised and closed and placed into deals. Now that I'm in 2026, I've really started diversifying more into private equity and started to look at cash flowing businesses because at the end of the day, here we are, we're all talking about raising capital. But raising capital doesn't only mean for real estate, right? Now that I see a little bit of the more than 100 investors personally that has placed $100,000, $500,000, $1 million with me in different deals. And so the more that I cater to what they're looking for, the more I could see that I need something that would balance their multifamily portfolio with me. Right. And so I started looking to, yes, car washes, because in a car wash, for example, that's not just the real estate, but also the business. And so I'm just keeping my eyes and ears open for potential cash flowing businesses that could use some of these capital as well, because I feel like with that, then there'll be more cash flow versus with a lot of our multifamily deals, that's a lot more equity. People are waiting 5 to 7 years. And
Mhm.
most investors don't have the patience for that. They would prefer that they see some cash flow monthly or even quarterly, but really a bigger paycheck, that payout within 3 years. And so I'm starting to diversify my portfolio instead of a 5 to 7 year to a 3 to 5 year horizon.
I'm curious with the because you entered similar time to Tim, and Tim talks about this a lot, where you maybe got lucky or unlucky with some multifamily with the rate hikes, right? Some people got severely unlucky. Describe that to due diligence, luck, whatever you want to put it on. But since you started in 2022 and you talked more about private equity, what have you seen shift in terms of investor motivation, right? Because in 2018, everyone was fine with 5 to 7 years. So, what have you seen with your investors when you're shifting more towards the shorter term returns?
It depends on the investor. So keep in mind, there are investors that haven't gone full cycle yet, and there are investors that's already gone full cycle. And for those that's already gone full cycle, it depends too, right? Because they could have, let's say, invested back in 2018. Let's say they got some cash flow 2021, 2022, and then now they're recycling those funds again. So that's a different investor because at least they've seen some success. Keep in mind, I started 2022. So one, I don't have any deals that's gone full cycle yet. I'm on 12 different deals. Some are general partnerships. Again, some are funds. They haven't gone full cycle yet. We've done refinancing already for some of our 2022 deals. But then my core investors, they're still waiting. And so I've realized that for these investors that haven't gone full cycle yet, they're looking for other classes. As then they also have a certain amount of allocation that they put into, let's say, multifamily. I'll give you an example. So for my first deal, I had a friend who's a plastic surgeon that put in 500K on my first ever deal, right? And then when I started asking him, hey, do you want to do this next deal, third deal, fourth deal? He kept saying no. And finally, I was like, maybe I should find out why. And then I found out that he's already maxed out his allocation for, let's say, real estate, because this is not his only investment. He has clinics and other real estate investments. And so I think it's good to just have those conversations with the investors as well and to see what they're looking for, right? Because it depends on how much capital do they have and what do they really want to invest in. But let's just say that they're dipping their toes into, let's say, multifamily investment or some type of real estate, or maybe they're in single family now moving over to commercial. And when I say commercial, it could be smaller retail, it could be maybe medical offices, or it could be multifamily as well. But as they transition into this next phase of their investment journey, they also realize that, yes, there's more risks. It's not just like a fix and flip that you do within a few months. Now you're holding the capital much longer. So there's just more to think about. But overall, I feel like that the sentiment of the investors right now, they're still cautious. And why is that? Even for me personally, right? So I started investing in 2022. I've done some passive investments. And my first passive investment went into foreclosure 2 years ago. So I lost my 50K on that first deal. Again, I'm a passive investor. Even though I've learned, paid, and really did my best, I could underwrite. I'm in Houston. This deal was in Houston. That's a matter of, it's really lending, right? The rates at that time, and it was a variable rate. So at the end of the day, I think it's very hard for people to come out of the last, let's say, 10-year cycle, even 7-year cycle, and scaff it, right? Unhurt. Because if they're truly investing, Trevor is here, Gabriel is here, you have very seasoned folks out here who are in 10, 12, 20 deals. I think Trevor's 24 deals. It's very hard to come out and be all positive in terms of turns, right? It's going to be up and down. But at the end of the day, ideally, if you average that cycle when you've invested into, let's say, that asset class, ideally you should do better, right? Than, let's say, the stock market, if that's what you're indexing. So I think it really depends. And I think for most of the investors, it's good to really sit down with your financials and figure out, husband and wife, figure out what is your plan before you really start looking into the different asset classes, right? And just really educate yourself. That's why it's good that you're all here, because then you'll learn from different people, different asset classes, different expertise, different locations. You just have to really do your own diligence and be careful with where you invest, who you invest with, right? That time horizon, just really understand what you're getting yourselves into.
Yeah, I think if you were Trevor or Gabe or Tim, if you were investing heavily from COVID to 2022 and you did come out with no losses, I would just go buy a lottery ticket probably if you invested in 10, 50, because you can do only so much due diligence. Debt and rates, you can't really control. Now you can underwrite more conservatively, but multifamily specifically was so strong for so long that logically it's going to come down, but you don't want to be the one to bet on it and be wrong and lose out on a good deal. So I think it's pretty common for a lot of people, especially people who aren't GPs or they're just strictly LPs. It's hard for them to get back into multifamily. So that looks a little different in the next few years, at least in my opinion. But that's why I ask, what is their appetite to see what do people really want right now? I know that you just started heavily investing in the last 4 or 5 years, but you started in single family 2000, right? So I'm
Yes.
curious, what motivated you to pursue multifamily commercial 15, 17, 20 years later to really get
Yes.
started in the commercial side?
Yeah, so my husband and I were always working, right? So we're working parents, we're already busy with our corporate careers. We have 3 kids. And so single family for us had always been something we did on the side, landlording, right? We would buy a triplex here,
Mm,
a sevenplex there, and just hold it. Even land. So we've done all kinds of stuff in that regard. And it just felt like it was too much work, right? We would be traveling and then tenants would be calling. It just didn't feel like it's a true passive investment. And I just didn't know any better. right? Because back then too, I was living in New Jersey, working in New
Hmm.
York. And so it was super expensive to even buy multifamily there. And we just were never educated. I didn't know anyone that was doing it. So 2021, post COVID, we moved to Houston. My sister lives here and we figured we're done paying state income taxes and we just like, we want better weather. So we moved. And when we moved, I had this decision point where I was like, all right, yeah, I'm a chief financial officer, making really good money. I can continue doing that if I wanted to, but I felt like that was a time that I wanted to bet on myself. I've always wanted to start some type of business. Kids are growing, and I figured I really want to have more balance in my life in terms of time and money. So I was like, for 1 year, I'm going to give myself that permission to just leave my job. So we resigned, moved to Houston, and I said, I don't know exactly what I'm going to do. I thought I was going to start some type of business. And then the more I looked into investing, because I was like, we already did residential real estate. Maybe I should check out commercial. But when I looked into commercial, I started looking at the different types of commercial real estate investing. When I talked to the mortgage brokers, the lenders, back then in 2022, they said that the darling of the commercial industry has always been, at that time, industrial and multifamily. So it's like, I don't really know anything about industrial. Multifamily, it feels like it's a more natural path for single family. And so I dove into multifamily. It's also helpful that my sister, so she's an architect, she owns her own firm. She's already designed and built about 25,000 multifamily units. And I didn't know this coming into Houston, right? So when I came in, that's what she was doing, is building these new 200 to 300 unit multifamily complexes. But I never did new development. I've always done value add for my portfolio because, again, back then when I started, it wasn't the right time to do new development. There's no cash flow. There's no tax savings for the investors. It was only equity after a certain amount of time. And so, but now that's shifted. So I'm starting to see better deals there. So that was really my path to multifamily. I always looked into the supply and demand as well as to why, how can it go wrong, right? I'm always thinking more on the risk side. How do I preserve capital and how do we not make a mistake? And it's really more on it's housing, right? Everyone would need some type of housing. It's more expensive for people to buy a house than rent. And I happen to have moved to Houston. And for most of you are probably living in states or investing in states that are seeing growth. So for me, it was like basic fundamentals on why this business could work. And then I work my ass off to make it work. Because I was like, if
Hmm.
not that, some of you, Chris was saying he's an engineer. I don't know if you're already out of your work or you're still doing real estate or maybe, or for some of you that may still be in the corporate world, I just gave myself that 1 year and I was like, if I don't succeed in this, then I'm going to go back to my corporate role. And I really didn't want to do that. So I was like, I have to make this work. And so that's what happened. And that's when I met Trevor, I think Gabriel shortly thereafter. So it's like now you have all these friends in the industry and you're rooting for each other. And even Tim, we're here in Houston. So it's like you root for each other and you just want everyone to succeed.
It's crazy how life works, right? You move to Houston and you're not sure what you're going to do. And then your sister does. I know if my brother was an architect, I'd be like, oh, he's an architect. I don't know what he does. I'm not an architect. And you find out, oh, they do something in the same kind of realm that I do. Maybe I can learn. It's just funny how it's like a sign almost, right? Oh, she's designed all, she probably knows a thing or two about multifamily. It's so funny how that works that you're just like, oh, I'm going to move to Houston, I'm going to figure it out. And then you realize, oh, wait, my sister has this background. I can probably leverage that in some way, right? I'm sure
Yeah.
it helped you in some way.
It's
And
funny. Yeah. It's very funny how it happened because with my sister, all I knew was she was an architect. I had no idea how big her business was and exactly what she does. And then finally she was like,
yeah.
okay, I do multifamily. What had happened was because I didn't have a job yet and I was still figuring out what to do the first few months of two, she was like, Angie, why don't you help me with marketing or business development? And so one early morning, like I usually wake up early, like 5 a.m., 6 a.m. I woke up and I was like, if I'm going to help her, I probably should attend some events. And so I Googled it on my phone, right? And I just said architectural conference, real estate, multifamily Houston. Lo and behold, the next day there was an event. And at that event, I attended it. It's right here in Buyers Club in Houston. And that's when I met the brokers, the lenders, the operators. If I say the names, you'll know who these people are. Investors. And I was just in the room and I was so new. They were talking about cap rates and it was just like way beyond my pay grade, at least because of my finance background, MBA, I could at least figure out that this is a good opportunity and I should look more into it. But that's really how it started. My sister, even though she's had all these projects, she's always been a service provider. So her first passive investments were in my deals. I started investing
Mm.
passively first before she started investing passively. And that's what you're going to notice from a lot of business owners. Most business owners are so busy with their own businesses. They have no idea how to invest, where to invest, who to trust. And so she didn't have anything on the real estate side until I came along. I started investing passively. And then on my first 5 deals, she put in a sizable amount. And before you know it, she's invested in 5, 6 deals. So, yes, it's key to always take that next step, right? I don't want you all here to just be learning. I want you to start thinking of what's my next key action step, right? Because that's what it was for me the first 5, 6, even now, 6 years, right? 5 was that I'm looking at the next step. What's my next step? And I can't see all of it all in the straight line. It's just like whatever I could see right now, I'm just going to do it. It could succeed, it may fail, right? You always have that 50-50 chance, but you just keep moving. And that's how I got to where I'm at right now. So I just kept taking that next step.
Yeah. And the lesson there is pay attention to what your siblings do. Pay attention to their jobs. But also, you make a
Yes.
good point on business owners. Tim, that's his biggest avatar is business owners in Houston, because anyone who's ever owned a business knows it's like being an operator, right? If you're an operator, you're operating, Gabe knows this very well. You're operating 2 or 3 deals at a time. You don't have time to think about anything else. And so, if business owners, you can passively educate them and kind of drip feed them information, and they're a really good avatar to pull from because they make money, right? And a lot of them just go default stock market crypto. That's what they do.
Mhm.
Just put money in S&P and let me get back to my job, my business. So that's the really good points. I'm curious, how did you, I know you started going to events. How did you really get the skills? Did you have a mentor or a coach? Did you join masterminds? Did you have someone in your corner that kind of taught you
Yeah.
the ropes?
Yeah. So first year, I'll give you the actual timeline. By end of February, early March was when I incorporated my LLC. March, I started going to events. I've gone through 10X Growth Conference with Grant Cardone. I didn't sign up for any of his programs. I just wanted to check it out because, again, I was new. I was figuring this thing out. I've gone to Brad Sumrock's event. I didn't sign up for any of his programs either. The reason for that was because when I first got into Houston, so I would say maybe mid-February, I had signed up for a group. It's called Big Dogs, where Trevor and I had met. The only thing with that is they really teach single family, not too much on the commercial side, at least in the time when I got there. And so I had to keep looking for other mentors or ways to learn from people. However, and so from that point on, I kept investing in other masterminds. Tim and I have been in some of the other groups, like Raise Masters, for example. I was there for 3 years, so we were there together. Even until now, I'm in different masterminds, not exactly for capital raising. I'm more on the AI, marketing, branding. I have 9-figure coaches, 9-figure. I always invest in some type of education. I feel like even after my MBA, everything I've done on the real estate, I've spent probably close to 200 grand at this point, not on passive investment. These are actual masterminds. Anything that could speed up my knowledge, my results. And that's what I would suggest for you all too, right? So for example, with Tim, I know he has a program, anything, especially marketing. If there's one skill I wished I learned sooner than later, it would
Hmm.
have been marketing. I was so good in finance, accounting, all of that. That didn't get me far, right? Because at the end of the day, it's like, how do you get your expertise in front of people? And that's really a marketing skill. So marketing AI are two things that I've invested heavily since 2024. I would travel to locations just to get the information from the best. So I think that's super important for people to find mentors and just be around people that are moving. I'll give you a quick example of how I got my first deal because I think this is important for some of the folks that are again starting, right? So I went to an event in Dallas that was, I think, end of March or maybe early April. And this guy and I were we didn't sign up for the program for that group, but I was getting coffee. No, he was getting coffee. I was getting my green tea. And we just struck up a conversation. This guy happens to be an accountant as well, also MBA. So him and I got along well. We just said, we're going to keep in touch. So it's just one of the friends that I met at a conference. 3 months later, so we were just keeping in touch here and there, maybe every 2 weeks, every month, we would just touch base. I told him there was an event happening in North Carolina. No, I think it was, yeah, North Carolina. So I traveled to North Carolina. He was there as well. And we were always just looking for deals. But a month after that, through him, because he was the one that had more relationships already, I got into my first deal. So my first ever deal was really because I was referred into the general partnership team. I was the least experienced person in the group. This was a Sugarland deal, about $67 million purchase price. We had to raise $27 million of equity, and my partners are local, right? Sugarland is in Houston. And so it's like, you just don't know who you're going to meet in these events. So I come out whenever I go out to these events, I just think of, there's got to be someone I'm going to meet. I may not know yet right now why I'm meeting this person, but you're here for the long game. I'm not trying to just do this for the next 5 years, 10 years. I already knew when I started this in 2022, this is going to be like a 30, 40 year thing. This is what I'm going to do for the rest of my life. And so I'm very careful with the relationships I build and also the partnerships. So just keep in mind that you're going to meet these people along the way. You just don't know how you're going to be working together yet, but you'll be surprised, because that's how I got my first deal, is always just shaking hands and meeting people. And I got referred into the deal.
Yeah, you make a really good point that I wish more people would at events, right? We just had UP Dallas for our mentor.
Yeah, I was there. Yes.
Yeah. And we have our capital summit every year, and we had our spring event before we recorded our mentor. And I'll talk to people who are interested in coming. They're like, is there people I'm going to meet at this event who can invest in my deal? I'm like, maybe, but that mindset is the wrong mindset. You can meet someone at our event in September, right? And you might not do business with them for 6 months. You might not do business with them for a year. They might give you $100,000 check tomorrow. That doesn't change why you're there and the intention behind why you're talking to people. Because I meet you at the event. We do two totally different things. I do RV parks in Wyoming, right? And I think you can't help me at all. So I don't follow up with you. I don't stay in touch with you. But you never know who you're going to meet through other people. That's such a good example. You met some guy at an event. You guys stayed in touch. You went to another event. And then you're in a $6 million deal that on your own, you probably would have never been able to get into. So that mindset is super important for anyone that goes to events. And events are the best way to find your future partners, obviously. But that mindset of long term, I'm playing a long game, is super important. So I talk to too many people, like, oh, I want to come to your event. Am I going to find fund managers to invest in my deal? I'm like, sure, not right now. Would you invest in my deal if I pitched you a deal on the spot? Probably not. So that mindset's important. And you talked about marketing. That's Tim. AI and marketing is his whole thing. Yes, that's half of what we do in the alliance is marketing, because where our investors, they're online. That's just the name of the game now. So if you're not using AI, if you're not doing some kind of marketing, you're probably falling a little behind. So I really love your intention and mindset behind what you're focused on, because it's 2026. If you're not using social media, you don't like it, or you don't have someone on your team that does it, you're just missing out on capital. Pretty simple. That big $67 million, it's funny, it was in Sugarlands where Tim lives. I want you to share your experience from your first capital raise. Did you raise any capital on that deal, and how did it go?
I did 1.3 million. Yeah, on the first.
So tell me more about that. How did that go?
Okay, all right. So first ever deal. I had no business cards, and I was like, would this even work? By this time, I think I've done maybe 4 passive investment deals. And so when I approached my investors, or really my friends, I was still in my B list. This was a 506B deal. I was just telling them my journey. And this was also post-COVID. This was around June of 2022. I was just telling them too that I just moved to Houston. And I just said that I've started investing in multifamily. At the point, I think maybe I have 1,000 plus units in 4 deals. And I just said, I'm investing as well for that first deal. I invested $75,000, right? That was a class A minimum. And I just told them, I think it's a great deal. Go check it out. And that's really all I'm doing, is asking them 3 questions. Would you like to make passive income, right? So that's cash flow aspect, equity, right? And I think that time it was maybe 2x in 3 to 5 years is what everyone was talking about in 2022. And then the third one is the tax savings. And so for that first deal, 8 people invested. My sister and I were the only ones from Houston, right? I had one guy that put in $500K, and the rest were still my friends from New Jersey, New York. And surprisingly, I was just like, wow. So when it worked and people started wiring, and it's funny because, again, I didn't know how this worked. I didn't really have anyone telling me, okay, Andrew, this is how you follow up. And I was just really thinking that if it's good for me and I feel like the numbers are solid, my sister's investing a huge amount, I was like, it could work for my friends too. So at least I feel like I've done enough due diligence, right? Of visiting the property, looking at the general partnership team. My business partner is the key principal and the main general partner lives in Sugar Land. So I know that we didn't even need a broker. This was straight from a family office, right? So I just knew that this is a great deal. Sugar Land, there's not a lot of properties there, and it's an institutional sale. So the more I thought about it, I was like, if it's good for me and I feel like I'm going to invest my own money, it's going to be good for my friends as well. So I came from the mindset of how can I help the people I like, know, and trust, right? Like my friends first. And honestly, I was surprised because after that first deal, I just had to look myself in the mirror and be like, this is a business model. I was like, people had no clue. And I could tell you for that first deal, one of my closest friends, this guy's like a 9-figure guy, meaning I know he can invest more than the whatever. I think he put maybe 150 or maybe he put 202 in the first one. Anyway, I just know that even for this guy that has super high net worth, he's so busy being a business owner and he has stocks and crypto and real estate of his own. He'll buy mobile home parks by himself or apartments by himself, but he's never heard of multifamily syndication. This is where we all come in, or any syndications that you do. I was just surprised. These people have never heard of what we're doing. And so it just gave me that confidence that there is a need in the market. And I figured if these very savvy people have not heard of it, then we could be that conduit to that information. Mm-hmm. But again, it was tough for that first deal because I had no marketing. I had all my first 5 deals. I didn't even have a CRM tool, right? I was just emailing them for every deal. I think for that first deal, I talked to 40 people, 8 people invested. So my ratio is like 1:5. And again, these people were not warmed up. It wasn't like they already knew what multifamily was. It was like I was really explaining it from the beginning. So the more that you can raise capital, for example, with people that you've already at least warmed up, they're already aware of how this works and they're just looking for the next deal, the better it is for you. And then the more that you could really build that relationship. So it's not just they only hear from you whenever you have a deal, right? Because that's not going to be good either. Now you're going to sound like a salesperson. Mm-hmm. So anything you can do to bridge that gap so they feel more comfortable parking $50,000, $100,000 with you, the better it is. The other thing I did too for that first deal, again, I borrowed someone else's credibility, right? Meaning the pitch deck, I didn't touch anything in there except for adding my picture with the team. So they knew this couple who's a doctor, they know the whole team. And then I just had to add my bio and my picture. I really partnered with someone that I knew was already top notch and that I could use the pitch deck as it is because I wasn't going to reinvent the wheel. I didn't have enough time. The deal was already closing early August. They brought me in towards the end by like mid-June, early July. I had 1 month or maybe 5 weeks. And I didn't even really believe that I could do it. But that's why you just have to talk to whoever you need to talk to. Because like that 500K investor, I'd tell you, I wasn't even sure if I should talk to this guy. I've been to this guy's home. Of course, it's a mansion in Long Island, New York. And I was like, this guy's a grandfather, by the way. He's a plastic surgeon, multiple clinics in New York. And I was like, he doesn't need the money. That one I knew. But something inside me was just like, I promised my general partners, like my partners in the deal, that I was going to bring X amount of dollars. And so I was like, I'll just do whatever it takes. And so I texted this guy. I didn't even email this guy. I didn't call this guy. It was just a text message. I asked him, hey, would you be interested in this? And he's send me the deck. I sent him the deck over that weekend. He's okay, Anjou, I'm investing 300 to 500K. I was like, really? Even I wasn't sure this is all going to work. So it's really trusting and taking the next step. Again, if you never asked, it would have been a 50% chance it'll be if you never asked, it would have been a 100% chance it'll be a no. But if you ask, at least you have a 50% chance that it'll be a yes. So that's all I did that first deal.
Yeah. And it's funny because obviously, now there's a lot more that goes into it, but I think some people overcomplicate it. 3 questions, right? That's all it can take. And I think a lot of people see it as asking for money. The way I put it is presenting an opportunity. Hey, are you interested in passive income? Have you ever done this before? Do you want tax savings? I have this deal I'm working on. Check it out. Rather than, hey, give me 50 grand. Give me 100 grand. And the really wealthy guy, I've seen this with multiple people who they know people who are super wealthy. So they think, oh, if they're that wealthy, they obviously invest in real estate. It's not always obvious. So it's worth asking. Like you said, it's 100% no if you don't. And I love because my next question was going to be, how did you kind of try to establish credibility? It kind of goes back to the first part where people say, I can't get into a deal or I can't raise money because I don't have any credibility. Okay, well, you need to find experienced operators to partner with. None of them want me. Have you gone to events and networked with people? Back to what we talked about earlier. Are you going and using all these on calls like this? If you're on this call and you can't and you haven't done your first deal or you're looking for a deal and you're not messaging people and taking down their contact info, you're not doing the bare minimum of what you need to do to get into that deal. Because maybe you message Trevor. Trevor's a great guy. And you say, hey, Trevor, I saw you on Tim's Tuesday call. I'd love to chat. And in 3 months, you and Trevor do a deal and you leverage Trevor's credibility and you do what Andrew's talking about. And you go message your friends and family. It can be a lot simpler than I think a lot of people make it out to be. So it sounds like you did all the right things. You had the right mindset and it worked out. It doesn't always work out that way, obviously, but that's a really strong raise for your first deal. Obviously, everyone's network is different. Not everyone has wealthy individuals, and that's why you have to market to them and talk to them and educate them. A lot of super wealthy guys don't know about the tax savings and they'll go buy apartments and buy portfolios, but they don't know about investing 500 grand in a syndication and what that can do for them on the tax side, using self-directed and 401k and all that stuff. So really good stuff. I love it. I'm curious now that you're where you're at now, investing in marketing and AI. What are some marketing strategies you use right now when you're trying to promote a deal?
Yeah. So for me, it's a lot more on the speaking side. So again, I've transitioned from reaching out to my family and friends and maybe acquaintances. Now, of course, I'm getting referrals as well, to speaking more into different events or like here, webinar. I'm starting my podcast as well. I'm having a book that's going to be launched by November of this year. I'm going to be in a documentary. So I'm doing a lot more on the true branding and marketing because I feel like I could really impact globally versus than what I'm just doing in, for example, Houston or Texas. So I think it's good for all of us to really think bigger and how we can have a bigger impact, right? A bigger footprint. Also for marketing in terms of strategies. And I've seen Tim really develop this throughout because we've been friends since school, right? And I've seen him grow his platform, his reach, and it's consistency. This webinar on Tuesday, I remember that I was there and I think the first one, or maybe the second one that we've done for this one, I knew when he was still building it from scratch. Marketing is all about consistency, right? So the more that you could be front and center, the best in this, absolutely not. I don't post every day on my social media, my Facebook, all of that is being revamped. Ideally, you have Facebook, Instagram. I'm not on TikTok. I think a lot of people are doing very well in LinkedIn, and some of my friends and some of the marketing coaches that I've hired over the years have also told me to stick to one first, because sometimes it's so easy to just get into 3 or 4 different channels. And before you know, you're not doing any of them very well. You're average in all of them. And so for me, my initial ones was really Facebook, because I was already on Facebook. So I would post on Facebook, and whatever I post on Facebook were copied into Instagram and LinkedIn. Okay, that's not the best way to do it, but I'm telling you, it works for me. I've gotten investors referrals just because I'm posting, and people would check you out online before they even meet with you, either personally for coffee meeting or even on Zoom. That's your business card. They would have already checked you out, see what your family's, what kind of person you are, what kind of stuff you post online before they already have made a decision in their head, whether they're going to do some type of business with you or not. And so if you don't have a solid social media presence, I think that's low hanging fruit. And then of course, then you evolve, right? So now for me, I go to events where I could speak and share my knowledge. They're not all real estate. Why? Because then we see the same people, right? And so I've also ventured out into other places where I feel so uncomfortable being the newest person in there. And these are mostly institutional family office style, where people in there are sitting with like pension fund and they have like billions, hundreds of billions of dollars to place capital in, right? And they're always looking for, let's say, emerging fund managers. So I'll check out those places as well. I haven't gone internationally, although I'm going to Italy end of this month. And that's, again, another networking event, right? And so again, I'm varying it. It's not reduced the amount of real estate events that I attend, unless if they're Houston. Tim's event I've always attended. If they're Houston, I try to be present here because it's good to really be known in your local market. But for some of you too, if you don't, hey, Hutch, I see Hutch from Hawaii. Yay. Now, as I mentioned, I'm writing a book and a documentary. So, this book that I'm writing, I'm a co author. It's called Beyond Your Wildest Dreams. And the people that I'm co authoring with on this book are some of the people that have done the Secret documentary from maybe 20, 30 years ago. So, it's Jack Canfield, co author of Chicken Soup for the Soul, or my other mentor, personal mentor, Marie Diamond. So it's like now I'm really like when I say branding and marketing, I'm really just stepping it up, getting out of my comfort zone and just really getting my name out there because I know that if I'm marketing, not just consistently, but if it's aligned with my values and my brand, I'm able to really harness that. It's like leverage, right? It's like the low hanging fruit. You have it, and all of a sudden it's easier to do business. You don't have to explain as much, like who you are, what you do. It's almost like people check you out already, and you just come in there and just figure out if it's a fit. So it really reduces the time to get deals done. And that's my hope for all of us here is to be able to be so efficient, so effective, because we've already leveraged branding and marketing to our advantage.
Make a really good point on the social media aspect. 15, 20 years ago, if someone wanted to do business with you, they went to your website, right? We
Yeah.
build the marketing for our alliance members, and they're like, oh, will you build me a website? I'm like, the main landing page, we can build it, but that's not where people go anymore. They might go and check out your lead magnets and stuff, but they're going to your LinkedIn. They're going to your Facebook because that's where I could put anything on a website, but your Facebook that you've had for 15 years and your LinkedIn that you've had, that's your business card, right? Like you said, that is where people decide if they want to do business with you. So even if you don't post all the time, making it, putting resources. Tim, on Tim's LinkedIn, he has his book right there in his bio, free ebook, pay zero taxes in real estate. He gets a ton of leads from people who just,
Mhm.
oh, free ebook, I'll take it. And then he can call them and he has an excuse to say, hey, checked out my book. What did you think? It's a really easy lead magnet and not using that low hanging fruit. I know a lot of people don't like social media because it rots your brain, but if you just stick to
Mhm.
the business side, it's just a tool that can't be overstated. But I do like that idea of branding in terms of doing more. It's the first
Mhm.
thing that we tell everybody. If me and you get on a Zoom and I record it, I have a podcast. That's all you need. You don't need a fancy studio. Neither of us. We're using virtual backgrounds. This is a podcast. I'm sitting here at my home computer. Your computer. That's all you need. And how, for those that don't know, how Tim started the Capitol Party, which you were there for, he chased down people who have raised at least $100 million. He went to events, he badgered them, he called them, he emailed them, hey, come on my podcast. And automatically, if I was brand new and I had never done real estate and I interview you and I put it online, I gained so much credibility, so much authority because I've interviewed someone with all this success. And it can be that easy. Just go find people who are, everyone loves to be interviewed, right? Even if I have no followers, no one's on the show, someone will say yes. And that's a super quick way to build. And that's why Tim's audience, I think, has grown how it has. We have 30 to 50 people on here every single week, which is not easy to do. We have to remind all
Yeah.
of you many times, but that's okay. So I love the branding, taking that front and center, because that's, think of Coca-Cola or any other big brand. When you see their brand, you know what they do. And that's really what you want to, when someone goes on your LinkedIn, in 15 seconds, they should know who you are, what you do, and how you can help them. If not, attention spans, they're gone. So I love that. I'm curious, we talked a little bit about it, consistency. How do you maintain long term relationships? I ask this question a lot, and some people say, oh, I send a bottle of wine or a birthday card, or do newsletters, direct mail? Do you do anything like that?
Yeah, so aside from my company newsletter, it's really for me, I'm more on the personal touch. So I've done investor dinners, right? And I invite at least the ones who are local here in Houston. So we've had an investor dinner, and it's like, how can I be different than everyone else? So yes, my birthdays of all my investors, 100 plus of them, are on my phone. It's a different color, so I personally text them. Sometimes for those that I truly know, I would leave them a voice note. It's just the little things. Can I automate that? Of course. It could be an email, but for me personally, I just try to make it even more personal and I greet them directly. Have I given gifts? Yes. I've done some branding for Beam Investment Group and I've done that too for holidays. But I think it's really, if I'm doing something, let's say locally, let's say my mentor is coming up, I would look into my investors first and figure out who can I add value to, right? And invite them. right? To also meet the people that I'm working with or learning from and see if they're available. And then from there, I start inviting other folks. So I think it's always about deeper, authentic, meaningful relationship, right? Of building that trust. Because again, for me, the way I work my business is these are the people that I would love to do business with and life with for the next 20, 30, 40 years. So as much as, and I've learned there were some investors that, yes, they got into some of the deals. Would I ever do deals with them again? No. So now you become more selective. Some people are just a pain as well because either they don't understand the longer term horizon of the investment and maybe there's stuff that's happened to them personally, but this is a business. You got to run it like a business too. So I'm just more careful too with the people that I build, not just in my inner circle, but even with my investors. Yes, you can be picky too. Later on, you don't have to get every 50K, 100K from these investors. I think it's a matter of really seeing if there's a fit with how you work. And because this is a long term, at least for the multifamily, right? You're looking at a 5-year deal. So ideally, you should be able to service them for at least 5 years and ideally more, right? There are things I could do better off for sure. I know some people that are doing video sales letter, they call it VSL, but it's like, and this is something I want to do before end of the year, is to review all of my investors personally, right? So let's say I have an investor, I want to review their whole portfolio. So maybe they're in deal number 1, deal number 7, deal number 12, right? And I just tell them this is what's happening for your deal, and it's a video of me, and then I send it to them, right? So that's on my wish for end of the year.
That's a
Why
good
am I doing
idea.
that? Yeah, twofold, right? One, yes, they're getting all the newsletters anyway, but how many people are really reading and understanding it? Not a lot. So I was like, okay, again, how can I be different? How can I give them more value? So I was like, before end of the year, it's almost like a yearly review. I could give that to them already and just be like, this is what's happening to your portfolio, right? Send that video out. So again, I got to do that for about 100 people. And then once I send that out, I want to have a link in the bottom that says, if you have more questions, most people know my cell phone. If they're an investor, they're going to have access to my cell phone. But just to make it more automated, I'm going to have a link there that does say, if you have any more questions, you want to discuss anything further, book a meeting with me. And so that at least as I end the year, or at least begin the next year, for those people that are still looking to invest, or perhaps they have questions on their investments and I haven't answered it on the review, at least it gives them more opportunity to reach out to me, right? So I'm not just passively waiting for things to go bad. Or most people would only reach out if it's like, okay, what's happening? You've paused distribution, or that's usually when investors would reach out. But I want to be more on the offense and just be like, this is what's going on. I already know they're getting the newsletters, but this is something extra that at least they hear from me as well, and greet them maybe happy holidays for the if it's end of the year, and then book a call. So that's my to
Yeah.
do before end of the
It's a
year.
really good idea. You hit the personal touch on the
Yeah.
nose with one of those videos. And investors, some of them don't even open their portal. They're not open the email and skim through. If nothing's going wrong, they're generally, especially going back to if they're a business owner, they don't have time to go through the portal and look at all their deals. If they're invested in 10 plus deals, they're only really paying attention intently when something goes wrong. So you get the personal touch, and I don't think I've heard of anyone doing the video review of the portfolio. It's a really good idea. I'm sure a couple people will steal that idea too. That's really
Mhm.
good because you hit everything. You get the personal touch, update, and it makes them really feel, I guess, wanted. Like that sense of, oh, she's looking out for me. I'm not just a
Mhm.
number to her. You can send birthday cards, but that's a lot different to take that much time out of your day to implement that for your investors. That's a really good idea. And I hope that you do get it done.
Yeah, I will.
Yeah, knowing you, I'm sure you will. But I'm curious, I wanted to get some into the funds. So you're doing fund of funds now. What motivated you to start doing fund of funds, and how do you see it? What are some of the benefits and drawbacks to being a fund of funds versus?
Sure. So my first fund of fund was finalized and closed and raised and placed in July of 2023. And the reason why, and again, at that time, I was like, what is fund of funds? Why should I even do it? Why can't I just code GP? But then the more I weighed the pros and cons, I was like, oh, it's definitely more compliant to start a fund of fund. And let me walk you through the fund of funds that I've done, because there's all kinds of different funds. The ones I've done are what we call SPVs, right? So they're only, so I've raised the fund, but they're only for one deal. And why did I do it that way? It was really because of my partner for that deal. My partner for that deal is really a bigger entity. They do their own marketing as well. And so I had a few concerns of I want to make sure one, I service my investors directly. Two, they don't have access to the names of my investors because this is a business, right? So that was another concern. And third, it's the most compliant way. We're all under SEC, right? If as soon as you go down this path, you go through SEC compliance, and there, I already know that I won't really have material and substantial responsibilities because my business partner for this deal has their own property management company. They have their own construction team. They have their own asset management. They have 120 employees. So even if I say, oh, I'm in the meetings, I visit the property every month, none of that's going to fly with SEC. I don't
Mhm.
just, it is what it is. And so for those deals where I have a really big business partner that I already know I'm not going to have, usually when they're vertically integrated, I already know I'm not going to have substantial work cut out for me. That's a fund. So I've done 4 of those funds. And again, they're single purpose. My next fund, though, so again, just speaking this into existence, is going to be $100 million fund. But that next one, because again, I've done 4 of these already. So you have 4 funds and then 4 manager funds. So really have 8 entities just on the funds alone. And I'm like, oh, this is a lot of work, right? For whatever, $2-3 million that are in each of them. So it was like for the next one, for the same setup cost for the fund, I was like, I would prefer to raise a bigger amount and then be able to have those funds ready, right? I don't need to do the capital call yet and have the investors wire the funds until the deal is ready. But at least when the structure, the legal entity is ready, then now I can start placing more capital into different deals, especially now that there are more deals now, say 2026, moving forward, than it was the last 2-3 years. And so I just want to be ready as well on the capital side for that.
Are you doing a series or customizable fund?
Most likely it's customizable. I've looked into series as well. And so that's all up for discussion at this point. But also, the reason why I say that is because for me personally, I don't want my investors to only invest in multifamily, right? I want it to be diversified, not only car washes, meaning it's not just real estate. Once I start looking into true cash flowing businesses, it may even be a business. And so I just want to make sure that the docs are set up right so that at the end of the day, they have a more diversified portfolio that is cash flowing. And then at the same time, they have this midterm 5 to 6 years type of exit as well.
Yeah. I know, knowing Tim, I know he'll recommend the series fund. We like those a little bit more than
Yeah.
customizable. At least how things are now. Things are always subject to
Yeah. It's
change.
changed, right? I mean, at one point, everyone's doing customizable, and then now I think it's shifting.
Yeah. But it's funny because you are going down the path that we on the Alliance and what Tim does in his webinars and his events. You've gone down the exact path. You started a little differently, but we tell a lot of people SPV funds to be a capital raiser, to get into these big deals where being a co-GP is just not going to fly. And a lot of them, if it's a big enough operator or sponsor, they might not even want a co-GP for
Right.
that compliance reason. They might say they want a co-GP on their end, but then you have to think of compliance on your end. So it's a lot easier to do an SPV. Your investors are protected, which is
Right.
one of the biggest reasons I think a lot of people do it. You can control your investor returns a lot differently. Everything is insulated.
Mhm.
Liability wise, you're a lot more protected. Doing that as a fund manager, whether it's 500,000, $1 million per raise, and then later upgrading to a big series customizable fund. Once, hey, I can go raise $10 million if I need to, but I want to be able to place many deals in one thing instead of doing a
Mhm.
new SPV for it. So you're going right along the path we are trying to push. I think fund of funds has gotten more popular the last 4 or 5 years. And obviously, it's what Tim is focused on the most. And we've seen a shift in the last really 2 years of some people who are like, no, I don't want to raise money for other people, just want to do my own deals. And they're like, oh, being a GP is really hard. Why don't I consider this? Because especially the way we do it in the Alliance, we raise many fund managers in one fund. We'll make
Mhm.
way better returns, and that's an option for other people too. And so I'm really anticipating to see your next fund and where you go with that.
Yeah.
But obviously, we're coming into a weird market. I'm curious, what do you predict for the market? This is my favorite question of the call. What are your predictions for the next year or two, and how are you preparing to thrive in the next 12 to 18 months while we're in this kind of weird period for multifamily?
Sure. I'll talk about multifamily just in Dallas and Houston, because at least with that, I've talked to brokers, Newmark Knight, Marcus and Millichap. At least I have more of a firsthand experience or conversations with them, and they're very bullish. I could tell
Mhm.
you people from international are coming into our, I call it our borders, right? Or even here in US, mostly in Texas, just to invest. I'm surprised with the amount of demand from international investors to park some type of capital here. And that's why I think there's truly this great opportunity. I'll give you a quick example. One of my business partners is from Germany and he's never syndicated a deal. This was all, if it's a $40 million deal, he'll raise the whole $17-20 million capital by himself.
Mhm.
Now he's moving here, meaning he's invested in Houston. He has about 700 units already in Houston, and now he's looking for the next deal. So we were about to partner on a deal, and I was bringing institutional capital on this. So just to give you an idea, people who are already successful internationally, they're looking to invest right here. And they see that we have better numbers, right? Everything from the rent growth to overall returns, even for Europe, for example, European investors. There's some tax treaty for that too, but forget about currency and the exchange rates and all of that. At the end of the day, US real estate is still a great place to invest in. So I think it's very bullish. And that's why for me, I want to be very, like, I want to be aligned with what's happening in the market and be able to race for multiple deals at once. Because before, I think the max I did was 3 deals at one point, and those are smaller deals. One is less than 500K. One is like I already raised 2 million in one deal. And so I try not to be spread out too much with deals. And in fact, for example, last year I only did 2 deals, right? Every year I don't really set a number of, okay, I got to do 1 deal per quarter. No, like for me, it's really what makes sense. But I feel like now with the deals that I'm seeing, a lot of these are assumption loans or deals that are really coming from the lender. They're due, and now the seller has to get out, someone else has to buy it. If you have the capital, guess what? You have all the power, you have all the leverage. Debt is easier to get. It can all get the debt, right? That's not usually the bottleneck. It's whoever can bring the equity to the table. So for me, diversifying my equity sources. It's not just local. I'm also starting to look at national, international. That's why I'm going to Italy in 2 weeks. So international capital sources, but also diversifying not just retail equity, but also institutional equity. So technically for my partner and the German guy, if we were to do the deal, the 17 million won't come from retail investors. That's going to be one check from either a pension fund and a REIT to write the whole equity. So that's a different, again, conversation with institutional, but I feel like that's the evolution of raising capital. Yeah, you start 50K, 100K, it's great. And then before you know it, you're like, wow, in terms of the time, it takes the same amount of time to build relationship with people who have bigger checks, right? And so I'm just mixing it up, right? Seeing again, I'm just learning, taking one step at a
Mhm.
time, just like how we started this call. I'm just taking one step at a time and figuring out how does that piece work, right? Because 100 million, that's going to take forever if I were to do it on the retail side. So it's going to be a mixture of institutional family offices, international plus this. I'll give you one more tip, okay? Because this is really where my head is at. I saw the list of the people that's here, and I know some of you are already a little bit more ahead with raising capital. If you look at the population growth for the world, right? A lot of that is not going to be US. They're going to be India, China, even Africa. I was surprised. I think Nigeria, Ghana, these places are going to be bigger than US population wise, right? And right now, I have for one of the deals I've done, I had, I think, 8 accountants that are all Nigerian right here in Houston. They pulled their funds together to invest in my deal. So just to give you an idea, for me, my head is right now is how do I also tap into the global wealth, not just the US wealth, right? So marketing, that's what Logan, Tim, Hero Alliance is really teaching is you got to be global. You got to be online because there's only so much I can do, for example, in Houston and shake hands and go for coffee. But if I'm online and global, I feel like I can impact more people.
Yeah, Tim obviously have is the Vietnamese community. You make a good point. You can say, "Hey, I've raised $50 million." Mean you stop learning, right? Someone's raised $1 million. That's a lot when you're first starting. That's a lot of money. Have you raised 10? Okay, you raised 10. Have you raised 100? You've raised 100. Have you raised 500? There's always more to learn. which I think is important to keep in mind. Even if you've done 50 deals and you've raised all this money, you're still in the mindset, I still have to learn more. There's still people above me and I want to talk to them. And that's a really important mindset to keep. Never get comfortable, right? There's always another level. There's always a bigger fish and you want to be friends with that fish, right? Because that's how you keep leveling up. And so I'm curious some the tools and resources you use right now. Syndication software, marketing software, CRM. Do you have anything that you use in your day-to-day in your business that you recommend other people use?
Yeah, I'll tell you my whole software suite. So I use Cashflow Portal for my investor portal. I highly recommend it. Even before I think they started doing fund of funds in there, I was already in it. And I could tell you when I started, so of course, all my four funds were there. My other partners that were in other software eventually had moved into Cashflow Portal. And so that just tells you, even those that have already had a good amount of success somewhere else, they weren't too
Yeah,
happy with it.
Perry is great.
Yeah, they moved over, so that's one. And then for my CRM, I use Go High Level. They're in Dallas. I've gone to their conference as well, just to give you an idea. I've really invested in marketing. I even went to the Go High Level conference just to see what's going on with the CRM and just all the robust tools that I could use from there. And then for AI tools, I am using Claude and ChatGPT, both. I use Claude heavily, and it's the paid subscriptions, $20 for both. For Claude, not just for business, right? Image generation, that's better for ChatGPT. You can also have Higgsfield.ai, Higgsfield. And then but Claude is really what I use for, say, 80% of what I do, even if it's for personal. So for personal, I'm doing a trail half marathon in Moab in Utah in November. And so I'm putting in all of my personal information from I'm wearing a Garmin, right? So my HRV, my steps, my sleeping patterns, just so it could create a proper training program for me. So I use it for everything, for health, for business. It does a lot of the content now, like the copywriting, editing, but I feel like it could actually replace a virtual assistant for sure, right? Like you can do a lot more automations in it. So yeah, if you're not using any of these tools, definitely figure out how to learn, talk to Logan, talk to Tim, because I'm sure they're ahead with anything AI. So what else am I using? Yeah, I don't want to inundate you with a lot of the AI tools, but I think even if you get started with Claude and ChatGPT, you're already ahead. ChatGPT is very good for image generation, by the way. Before it was like Nano Banana. Now it's ChatGPT. I'm creating my profile pictures there, changing what I'm wearing. I'm creating my own websites directly from Claude, right? And I'm hosting it in Vercel and using GitHub as well. So I'm just like, I feel like now the AI is here. You have all this information at your fingertips and all you're doing is speaking. Oh, here's my favorite. I don't want to forget this. It's called Whisperflow. Whisperflow. I'm telling you, all the top CEOs are using Whisperflow. I have it on my phone. I have it on my laptop. It's free. What it is, you just basically dictate, right? And it types it up on any prompt. It could be, you could dictate it, paste it in ChatGPT or Claude or Gemini. I have all of them. Or even when I'm texting, because the text feature, I have a Samsung, or even the text feature for anything else is not as good. So even now when I'm writing my book and I'm dictating, it types even better. And again, it's free. So look it up. It's called Whisperflow. Here, I'll put it on the chat so people could see it. This is my favorite tool.
I haven't heard of Whisperflow, but if
Yeah.
it does dictation better than Apple,
Yeah,
Apple
it
dictation
does.
is not very good. So if
Yeah.
it's an improvement, then it's good. I can't recommend people use Claude enough. It is worth more than the 20 or so dollars they charge. It's the best AI in the game right now. If you do anything with spreadsheets and anything with the Microsoft suite or Google suite, it's going to 10x what you can do. And even the marketing for this call, I didn't have a good picture of me in a suit. So we just took a picture of me and put me in a blue suit for the marketing we do for the Capital Show. And it looks pretty good. I can't recommend Claude enough. And I didn't know Go High Level had conferences. We use them, obviously. I didn't know
Yeah.
we need to step up and go to the Go High Level conference.
Yeah. It usually sells out, so look it up. Their event is in October. And I don't know if you all are affiliates as well, but if you are, even better to go in
Yeah.
there and learn because that's how they roll out all the upgrades before they launch it the year after, right? You get all the
Tim will,
sneak peek.
Tim will
Yeah.
probably send me out there at some point then. Awesome. So I'm curious if you could go back and restart your real estate investing journey, no Bitcoin, no Nvidia stock. Those are the two you can't buy. What would you do differently?
I would really learn marketing and AI. Even if, let's say, AI wasn't there back then, it's the highest leverage that you can possibly do is learn marketing skills. And I can tell you, I'm an accountant. I'm not a front facing type of employee, right? I was always in the back crunching numbers. I don't do sales meetings. And so all of these skill sets I had to learn. I had to get out of my shell. But that's really the skill set that pays. And I could tell. So my daughter's 17, now she's 18. So she just graduated high school. She's going to college. And I even told her, don't even take finance. I think she's going to do business, right? And I was like, don't even take finance or accounting. Because I was like, AI can replace that now. Claude can do all the accounting work that you want to do. But marketing is a mixture, right? It's a little bit of, yes, creativity, but it's also the reporting and tracking and metrics. So there's a lot more into marketing. So I actually advised her to learn marketing because that's one thing I wish I had learned 20 years ago. I would be in a different place now if I had learned that. Because all these real estate skills, you're going to learn all of it. It doesn't really matter which ones you do, as long as you know how to market it. You could be in land development. You could be doing multifamily syndications. You can be doing single family. At the end of the day, it's how do you get the leads, right? Provide them some type of service and do that repeatedly. And that's really a marketing skill. Y'all are in the right place because you're here at Hero Alliance. You're within Tim's ecosystem. The more you invest in marketing, the more you use the tools and play with it. That's what I'm doing with Claude, ChatGPT, all of this stuff that I'm learning, branding, marketing. I'm playing with it. It makes it sound more fun. So I'm not in my head thinking, oh, this is going to suck. What are people going to think about this marketing? Right now, I'm just thinking, how can I play? How can I evolve? What can I learn from these tools and just really have fun with it?
Yeah, if you look at the biggest companies on the planet, look at their marketing budgets. They are astronomical. It's what they spend the most money on by far. And it's only going to get higher as we get more and more AI, more and more automation. So I really like that answer. And for someone who might be watching this or watching the replay and they aspire to do 100 million in business and raise $50 million, but they doubt their ability to achieve that goal, what kind of advice would you tell someone like that?
I think it's a limiting belief. It's usually fear of people, and that fear could be different for everyone. It could be fear of maybe public speaking or just putting yourself out there, fear of failure. And if you're not identifying exactly what that fear is, you're not going to be able to confront it. So let's just say, I'm going to make an example. Let's just say it's fear of failing. Okay, then now, if you don't take action, what happens next? You've already failed because you're not taking action. So it's like sometimes you have to level set and really believe that there's always two sides to the coin, right? This could really be very successful for you. Or again, if you don't do anything, then nothing would happen. So it's like, how can you inch your way to taking the next action? The biggest differentiator of people, whoever are successful and whoever is not successful, is usually one thing, and that's action. How do you implement? What is your speed of execution? Right? Because if you're like me back then, these are things I had to overcome. That's why I could share with you now. Back then, I would be in my head, and think of all the things that could go wrong. And then now I'm reframing it to how can it go right? What happens if it actually goes right? And then find out what really excites you. What's your biggest why? Right? For me, it's my kids. Right now, it's World Cup, right? Spain and friends are playing. My two boys are playing soccer. And I was like, I wanted to take them to some events like this. So I was like, okay, if not this one, the next one. And how much would that cost? So I've already put it on my notes here so that let's say it's 5 grand or 10 grand, that I could one day be able to spend that amount of money just because I wanted to spend some quality time with them and give them lifetime experience. So whatever that is, or for example, my parents are already aging, right? My mom and dad, we didn't grow up with a lot of money. And so my parents, my siblings and I are still helping them from time to time. And so it's like, how can I make sure that they have a comfortable retirement? They're already retired, they're not working, but comfortable life post-retirement, whether it's trips, whether there's healthcare. My dad's very sick. So there's all these things. So what are your buttons? What are the things you can tell yourself that, okay, you have some fear, but that fear can also have, again, it's one side of the voice, right? There's also another side of the voice in your head that's telling you, what if this actually works out well, right? What can you do with that? And so I try to listen more to this other voice of, all right, if I call this person, if I put myself out there, if I speak, write my book and do all these kinds of things, then I'll be able to do, let's say, take care of my parents, take care of my kids, never have to worry about money again, right? Travel wherever you want to travel. And most people get so lost with, okay, 5-year goal or 3-year goal. Just think about what can you do in the next 6 months, right? Some people, their next 6 months is equivalent to someone else's 1-year goal, 3-year goal. So now for all of us, it's July 14th. We have, let's say, 5.5 more months left in the year. What can you do to really expedite your results? So for me, I gave you some of my tips. I'm writing my book, I'm doing the VSL for my investors, right? I'm launching my fund. But these are, again, more concrete because I feel like it's better for me to work and take action if I know exactly what I need to do. So figure out what that is for you, right? What will be your next step so that by December 31st, you're going to finish the year 2026 and you're like, wow, what an amazing year because you step out of your comfort zone. Nothing happens in comfort zone, right? Nothing grows in there. It's dead, basically. So how would you like to start January 1st, 2027 with all these things that you've already finished and now you're in a different level because you've conquered some of these fears? So think about that. And I really wish you the best because I know you can do it. But you have to believe in yourself first. We can all, Logan and I, Tim, all of us here, we can believe in you. But until you believe in yourself, nothing will happen. So believe in yourself.
It's fantastic. Motivation overcomes fear every time. So I love that answer. Fantastic. You've been super generous with your time. A lot. I've gotten some insight myself
Yeah.
on the call. So you've been super generous. What's the best way for the audience to support, give back to you? What's the best way for them to connect with you? And I can put your email, phone, LinkedIn, company in the chat, whatever's
Yes,
easiest.
yeah, it's right here. So that's my cell phone number and that's my email address. But please do connect with me in LinkedIn, social media, because once we announce the book, Beyond Your Wildest Dreams, it's going to be, we have 12 other celebrities in the book too. I don't have any royalties in this book, but again, I wrote a chapter, but it's going to be amazing. And we're turning it into a TV series. We're turning it into a documentary as well. It's going to be global. So it's super exciting. But here, okay, Logan already put it in. Thank you.
Yeah, put your phone number
Yeah.
in there. Awesome. Yeah, this is great. I'm glad we could have you on again.